What is going on, you guys, and welcome back to another video. If you're new here, my name is Brandon. As always, be sure to check out our Investing Academy. That's that first link down below. But today we're going to go over a dividend growth stock. I have a few honorable mentions at the end, which I don't think are as attractive as a buy, but definitely ones to throw on your watch list. I'm a huge fan of dividend growth investing. This is essentially when a stock pays a smaller dividend often, but they're growing it very rapidly. As we'll see in this case, this is a perfect example. I say we dive on in, leave a thumbs up if you enjoy, but the company is Equitable Group, ticker EQB.TO. This is what I mean when I say the smaller dividend, 1.99, 1.98. If you guys have been following the channel for a while, you'll remember that I covered this stock once or twice in the past. A couple of years ago, I actually went out and bought the stock. A couple of months following that, I ended up getting kind of cold feet with the position. I wasn't totally sure. I ended up selling it. Well, in hindsight, it would have been great to hold the stock. It's been a good performer over the past couple of years. And hey, the dividend surely has been growing. We'll take a look in a second. For a quick overview on Equitable Group, a lot of our younger viewers especially will be familiar with EQ Bank. This is of course owned by Equitable Group. This is a high interest savings account, very popular here in Canada. They offer TFSAs, GICs, kind of like a digital bank. I've actually been a customer of EQ Bank over the past couple of years and have been very pleased with their service. Fun fact is that Equitable Group is actually considered the 7th largest independent bank here in Canada. Beyond EQ Bank, which is really just one portion of the overall business, they are ultimately a huge lender in the Canadian scene here. This would be things like residential, commercial lending. Fun story is I actually got my first ever mortgage by Equitable Group. So this was back a few years ago when I didn't quite qualify for one of the big 5 or big 6 banks. I just didn't have like 2 years of history. I had to go through a B lender. Well, Equitable Group was happy to lend me the money at a slightly higher interest rate. What I find to be very advantageous about this company is they're pretty much all digital. It's like a digital electronic bank, if you will. They don't have to be competing and fighting for the best brick and mortar locations. They can really cut down on costs. They've done a very good job at marketing, especially to the younger demographic, like the current generation. Up on the screen are a couple of their recent campaigns, which I think have done very well. They're very good at getting their messaging across. And I think the fact of the matter is that people are becoming more and more comfortable banking online nowadays. Maybe this wasn't the case over the past 10 years, but as of today in 2023, nobody wants to go walk into the bank and line up to see a teller and sign paperwork. That's like the last thing you want to do. I think even the older generation, older than myself, the boomers, if you will, a lot of them are finally coming around to that. And I think that's being reflected in the numbers here with EQB. This is a slide talking about their targets or guidance, their forecast for 2023. We see adjusted ROE or return on equity targeted at that 15% range. For many investors, that's kind of like that golden number. They love to see a return on equity at 15% or above. This is not just this year, pretty much going back over the past decade. They've been able to hit this target rather consistently with very little fluctuation. We look over to the right side of this slide and we see growth pretty much across all of their core business metrics. The slowest in the single digits being their residential loans, as expected maybe with what's going on in our world. But EQ Bank, as we see, these have been growing their deposits at 20 to 30%. Small business loans, they're expecting anywhere between 10 to 15%. Commercial loans, you name it. The company is doing well. Now, the dividend is what we're here to talk about today. They're currently yielding, like I said, 1.98, a 2% yield, let's just call it. That's the equivalent of about $1.32 on an annual payout. They've been growing this at 22% over the past 5 years. For me, when I see a dividend growth rate, anything above 10, 12, certainly 15 or 20%, that absolutely classifies as a dividend growth stock. This was just from last year, actually in February, about a year ago exactly today. They announced a 51% increase to the dividend. I believe this was a bit of a makeup from a bit of a pause during COVID, which we saw with a lot of financial companies. Nevertheless, this company boasts a very low payout ratio, meaning how much dividends they pay out relative to the earnings that they pull in. It's hovered between that 10 to 15% range. This can often signify and indicate that the company has some ample wiggle room to continue paying dividends and in fact increasing them over the years if they choose to keep that up. The stock has gone on a bit of a run since the October lows, as with a lot of the market. But today trading at a PE of 7.5, I think this is a very fair consideration for dividend growth. Again, I don't personally own the stock, but I do think it's one that's worth throwing on the radar. Now, if you aren't a fan of EQ Bank for whatever reason, I will throw out a couple honorable mentions. These are stocks that I don't believe are trading at the best valuation, but they're ones to throw on the watch list if you're interested in dividend growth. Number one, Alimentation Couche-Tard. We've talked about them tons on the channel. CNR, again, I don't want to keep repeating myself, but these two do grow their dividend at a very healthy clip. Even a company like Canadian National Resources, ticker CNQ, these would all be great suggestions that I would throw on the watch list. Maybe not necessarily buy at this given day. Actually, earlier this morning, like today, I actually added shares of Brookfield. Brookfield, as many of you know, went through this big complex spin-off, and I'm not gonna get into it in this video because it really is quite complicated, and there's a lot of YouTube videos online that I've been watching that can probably do a better job of summarizing it up. But I actually opted to buy both, ticker BN, which is Brookfield Corp. Think of this like the old Brookfield, the big parent company. I as well put a smaller portion into BAM, which is the new spun off division. This was one of my favorite long-term holds prior to the spin-off, and we didn't own any in our corporate margin account. That's where we decided to add it. So I figured if I liked the stock before, I probably like it even better now. I went ahead and added both, but you guys can let me know what are your favorite dividend stocks here in the Canadian market that maybe I didn't include. Feel free to leave those down below. If you guys enjoyed this quick video, do not hesitate to give it a big thumbs up. Subscribe if you like this type of content. Of course, again, our academy is down below if you're in the market for courses and training. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.